We are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. I hope everybody's doing very well. On tonight, I have 904. This is another episode of Trading with Travis, episode 310. Hopefully, everybody's doing very well as we go through. Take a look at what happened with the markets earlier today, see if there's any tradable opportunities that's going to end up happening a little bit later on going into tomorrow. And obviously, because it is the first portion of the week, remember, we have high impact news that's going to end up happening throughout the overall week. So, a lot of good volatility that's going to end up happening to try to see if we can be able to take advantage of some of those opportunities. So, with that being said, we're pulling up the disclaimer, and then after that, we'll go ahead and get started from there. Not a CTA, so I'm not going to tell you whether the is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So, with that being said, as we go through, take a look at everything. Talk about what ended up happening with the economic calendar a little bit earlier today. And then after that, we end up talking about what's going to end up happening a little bit later on. Obviously, take a look at a few charts. Typically, the 9 o'clock session is nothing more than being able to spot out opportunities of what ended up happening. Um, or talk about what ended up happening previously and being able to see if we can find some opportunities. And obviously, I need your help when it comes down to that. If you have any pairs that you would like to be able to talk about, please make sure you place them inside of the chat and go from there. Doing very well doing very well for us this month. Last month ended up doing very well as well. Obviously, we're starting in October now. This is the start of the push. If you don't know what that means typically from October to December, we typically end up having the largest push when it comes down to movement. Obviously, fourth quarter, time to make that movement, time to make the movement start and be able to go from there. So a little bit in a few hours, we're going to end up having interest rate decisions from the Australian dollar. Then after that, we're going to end up having CPI from the Swiss franc, and that will be it for. Um, that'll be it for today. I mean tomorrow, October 3rd. And then after that, going into Wednesday, we're going to end up having the interest rate decision from the New Zealand dollar, and then after that, we're going to end up having ISM and obviously non-farm payroll a little bit later on. So we just got to pay attention to those positions and being able to go from there. So at this point in time, if you have a trading pair that you would like to be able to take a look at, place it inside the chat box. I'm going to start off with the United States dollar index as a way of just being able to get started. And then after that, we'll kind of go from there. Keep in mind my charts I have a lot on my charts, so I'm going to kind of clear some of this stuff off as we talk. But we'll talk about what ended up happening and then kind of being able to make a move. I have my eye on US yen. US yen has shown signs previously that we're about to hit a double top, but I want to talk about that one as we take a look at other pairs that are kind of going through. So let's see, US dollar. What's going on with that? Okay, I haven't worked with this chart. Yeah, I have. Okay, cool. So United States dollar index. We're gonna start off with the weekly, then after that get to the daily, and then kind of move from there. From a weekly standpoint, we pop right inside of this. We pop right inside of this vortex area, meaning that the market ended up having a breakout. The market was in a tight consolidation for the past look like 12 weeks, and then after that, once we end up having that breakout and had that fire, obviously the market is kind of moving out of here from this position. So it's very good. Obviously, we're still remaining to be bullish. The question is, are we going to complete this overall move? I had it marked up at 13,250. The market is still looking like it's showing signs of being able to go through that and continue to keep on moving towards the upside. The question is how much steam do we have to be able to get in for other movements? So United States dollar base pairs, we have been bullish on the United States dollar just in general. The question is, do we have any more room going into today? I know on my automated systems, I think most of the pairs that end up cashing out today, US yen end up cashing out, pound yen end up cashing out, US yen and Euro United States dollar end up doing so as well. And so trying to keep our eyes on those as we end up kind of paying attention to certain moves that kind of moving forward. So we're going to go back and take a look at this from a field perspective one more time just to be able to ensure that the position that I thought almost 3 weeks ago um, is still the position where I think it's going to end up going. So ABCD market ended up going up here, complete the D extension right there. It's the second field right here. Too high. There we go. Two to the left, two to the right. Market ended up completing the D extension right there. Obviously, we can see a U-turn starting to happen. We are on the third field on the daily, meaning that this is our new ABCD swing right here. Let's see, pull it up. This was our previous ABCD swing. 1, 2, 3. Market end up completing the D extension right there. C turns into the new A, D turns into the new B. This is where we are currently right now for the movement right here. So when the market ended up retracing, I already retraced to the 23.6, but it did not go all the way down to the 382, meaning that we're probably going to end up seeing a little bit of hesitation right around the 127, or in this case, negative 382. So 13,289 will probably end up being the area of future resistance that the market may end up seeing. The only way that we can be able to truly know that is by being able to take a look at the left side and seeing what's actually happening. We take a look at this previously, we can see that 13,289 has been somewhat of a pivot. It's been a previous support right here. The market kind of blew through over in that end. It hasn't been a resistance though, so I think that we may end up seeing that the market may push up towards that area. The question is it going to end up truly rejecting and then falling down? We can see that obviously it was a support right here, support right here, support right here. Blew through right there. Is it going to turn around and finally reject up here, and then after that make that movement to the downside? That's something that we have to be able to pay attention to. But 13,250 is the position where I thought that the market was going to end up going bullish. I still think that it could be able to push up towards that area. We have a good morning star candlestick formation currently right now. Typically, when you end up having a morning star candlestick formation or a 3-bar candlestick formation, you end up seeing that the market will end up having a retracement first to retest that candlestick before actually being able to make its move. And that will be something that we'll kind of have to pay attention to. Going into the 2-hour, early on Sunday, market ended up having a strong retracement, ended up having a counter trend line break towards the upside. Since then, market ended up breaking out, got towards the top of this resistance. It's starting to break towards the high of, broke the resistance high that ended up happening on the 27th. And currently, right now, we're kind of resting above that. I do see that we have a blue bar right here, which means that we probably should look for the market to kind of retrace a little bit, which means that we're not going to jump in yet. Look for a little bit of a retracement first before being able to get in, but I still believe that the market is going to end up being bullish, at least for the next couple of days. Having a while, yes, if that makes sense. That means to me when I start taking a look at U.S.-based pairs, I'm going to look at it from a bullish perspective, as I've been doing over the course of the last really 2 months, being able to take a look at trades from there. So United States dollar index, we are bullish. So let's take a look at oil. Typically, when I end up taking a look at oil, I take a look at West Texas Intermediate. Oil has finally ended up having a little bit of a drop when it came down to movements. Take a look at this from a weekly perspective. Let's see. Same deal. Market was in somewhat of a consolidation, ended up having a good breakout towards the upside. Typically, remember in October or typically in the winter months, market starts to be able to make a push up to the upside. Currently, right now, we can see that that's actually happening in the opposite direction. Let's see if I can find my box. There we go. Okay. So we had a breakout. Remember, anytime that there's a breakout, typically you end up seeing a retracement. Doing this in real time, so please work with me here. That was, I feel, the last time we ended up taking a look at it, going towards the downside. So A, B, C. Market ended up hitting a D extension right there. Remember, C turns into the new A, D turns into the new B. Our new fibs are currently here to here. Market went all the way up to the 786 or the yellow line, which means that as we take a look at it, we're probably in the early days of this movement. But if the market remains to stay on path on the way that it's actually trading, then it could fall all the way down to $50 a barrel. Now, do I think that's going to end up happening? Probably not. But looking at my electricity costs that I end up having to pay for a little bit earlier today, we don't know. It may end up being some type of shock move that may end up happening at some point in time. Now, we had a morning star that ended up happening on this movement for the United States dollar index. We're seeing that we end up having bullish movement, indecision, doji candlestick, which means once again another indecision type of move. Now we have decision to the downside. We'll truly know if this market is going to end up being bearish if the market ends up breaking below this counter trend line break, and then after that retesting it, and then after that pushing down to the downside once again. Now, from a weekly candlestick standpoint, that means that we probably might end up being a couple weeks, or it may end up being a couple weeks to actually see this. But market did push all the way up into the sweet spot area. And end up hitting the, let's see, yeah, end up pushing up to the sweet spot area right up here, end up hitting this 786, which means that gold goes to gold. There's the expectation that down the line it should go all the way down to $50 per barrel at some point in time. Typing a wire, yes, if that makes sense. Once again, still in the early days, but currently right now, I would say that this market may end up being in a transition to being bearish. We don't know truly until it breaks a counter trend line break, but it could be in transition to be bearish. Now, with that being said, we take a look at it from a daily perspective. From the daily perspective, we can clearly see that the market has been long-term bullish. So it's kind of both kind of going in the opposite direction of what we're actually looking at. Market ended up breaking out of this overall area a few weeks ago. From there, pushed all the way up to the 786, but currently right now we're in a retracement type of phase until this market ends up breaking this counter trend line break and retesting to the downside. I wouldn't do anything bearish. I wouldn't do anything bullish until you end up having a counter trend line break to the upside. So currently right now we're in a no trade zone. Because we are in a no trade zone, that means that we don't trade. So oil, not looking at doing anything on this one. Typing a while, yes, if that makes sense. Let's see. Gold finally ended up breaking through that counter trend line. Not gold finally ended up breaking through the channel and through the consolidation that we ended up talking about. Okay, so we're going to start off on the daily on just gold, just kind of go from there. Done a long-term consolidation position all the way up to 2070 as a resistance support with 1680. Market is pushing down to the downside. We can see that this vortex area finally ended up getting broke down to the downside, and it ended up going past 1860, which was the first area where I thought that the market was going to end up falling down initially. Now, as we end up taking a look at it and just taking a look at volume profile would suggest that we have a further downside movement that could necessarily happen, and it could be stronger than the previous move. Let me explain why. This is the next support that could be hit right here, which is 1820. 1820 was the support inside of this consolidation area. It was basically a midpoint area right there, which is not really a support, which means that if the market ends up breaking past 1820, I think it's going to end up falling rather rapidly. Now, it could have a little bit of support, have a little bit of retracement before pushing back up to the middle of this hot volume node, right around 1850. But ultimately, if it ends up breaking past this area, I think it's going to end up falling right back down to support. We're talking about another 200-point move. This market continues to move in that area. Now, typically when a market ends up falling down the way that it did, I would typically end up waiting for a little bit of a retracement first before being able to jump in. This market has broken out of this consolidation, but never retested fully. And we are looking at 7 days of overall movement at this particular point. Typically, when you look at movements like this, you're talking about 7 to 11 days of overall bearish movement, especially if we're looking at stochastics or RSIs or anything else like that. So, because I haven't jumped into gold at this particular point, I'm not going to end up doing it as of yet. We end up talking about the United States dollar index as being truly bullish, but we have to be able to find our best opportunities. We want to be able to find high prices. We don't want to be trading in a low price area. So I would love to be able to see something like this. Market falls down to 1820, pushes back up, gives us a counter trend line break to be able to get into. And then after that, we take the trade once the market ends up giving us this movement right here, where we can kind of make a move from that counter trend line break. Until then, I'm going to stay away from gold at this particular point. I'm going to let my expert advisors basically trade them just like they've been trading for the last few weeks. No reason to be able to jump into it right now, at least manually. Okay, so let's go back to what we know. United States dollar index is bullish. We know that oil is basically in a no trade zone, which means that we should not do anything. And we know that gold is bearish. So that means that taking a look at pairs like US yen, the market should be going up. Taking a look at pairs that have a U.S. base, the United States dollar should be strong, but it looks like it should be starting to slow down in momentum. And then after that, when you take a look at oil has a huge correlation with the Canadian dollar. We'll probably end up seeing that that market may end up having a indecisive type of movement towards what's happening right now for what's that. Okay, so that's what we know at this particular point. Now, going back to the news, we see that the Australian dollar has a interest rate decision that's going to end up happening a little bit later on today. I want to take a look at what's happening with the Australian United States dollar, see if there may end up being a pair, and then after that, we are going to end up taking a look at US yen as end up making. We did pretty well today. End up making about 1.5% on US yen. On US yen. So we'll take a look at US 30 and NAS 100 as well. Let's see. Dow Jones starting to make its move. Let's see. Australian dollar, United States dollar. All right, AU. Has anybody traded AU in the room today or over the course of the last couple weeks? Anybody trade AU? Okay, let's talk about it from a weekly perspective. All right, from a field perspective, just talk about what I'm looking at. Weekly, we can clearly see that the market has been bearish, so I'm going to start the fields from a bearish perspective, and then after that, we kind of move forward. Field retracement goes from here, A, B, C, D. That's the first one. Let's see. Second swing end up being here. Went all the way up to the 618, fell all the way down to right there, but the extension was right here. So the new field is from here all the way down to there. All right, so currently the field or the swing that we're working off of is this. Here goes your A, here goes your B, here goes your C, went all the way up to the 618. So that means that the extension should be right around 52.40 from a weekly perspective. Long term, that's what a market could be able to go. Once the market ends up breaking past the B at 61.60, then we should see that the market may end up having a stronger push to the downside. But currently, right now, we are in an R2. meaning that the market has broken counter trend line break and is starting to be able to move to the downside, but it has not broken below the previous B. Because it has not broken below the previous B, it's a strong position to get into to the downside, but just got to be wary and try to see if we can be able to catch a high price as the market kind of moves from there. All right, so we know that. So let's use that to our advantage. C turns into the new C is the new A on a daily chart. So we're going to start from right here. A B C D. A B C D right here. All right. So on the daily field, we have a little bit left. The D extension is at 62.85. This will be the end of this daily swing forward movement. The way that we can be able to kind of match this up with what we're taking a look at previously is probably looking at pivots and looking at what's happening with bond profile. If we look at this in this area, the market ended up finding support, so it kind of matches up with what we're looking at currently. The daily is in a push zone, which means that we're getting close to the D extension, but we have not finished, or in an R3 area. That's the reason why we're seeing all this movement. But more importantly, we're seeing a little bit of consolidation. We can see that the Bollinger Bands are going inside of the Keltner channels, which means that we're having a little bit of a squeeze. If you're familiar with John Carter and the way he ends up using the squeeze, essentially what we're doing is waiting for a fire that end up happening at this particular point. If we look at moving averages, more than likely it probably end up telling us that the market is still pushing toward the downside, so we should have downside bias off of this. But we have not broken yet. So simple rule to me would end up being this: the market breaks below 63.50 and closes below that from a 2-hour perspective or a 15-minute perspective, then I'm interested in being able to take a sale. Until then, there's really nothing to be able to do at this particular point. But this is your 2-hour support resistance that we can be able to work off and kind of get a better idea about what's happening. Resistance, support, resistance, resistance, support. We can see that the volume profile is matching what we're talking about with this as well. Which is right here. So market breaks below 63, 63, 65 and stays below that, then we have a good chance of being able to see this market kind of ride out and complete that position. I would be interested in being able to sell this down to 62.85. My thing that I would be personally looking for is two kind of separate items. One, if we want to trade inside of consolidation, I got to see this market pop up. I want to see this market pop up and basically hit the bottom of this high volume node right here, right around 64, before making a U-turn. That's personally what I would like to be able to see before being able to jump in, if I'm trying to catch it right before the market kind of makes its move inside of consolidation. If you're a person that doesn't like playing with consolidation, then what I would look at doing is placing a pending order. Place a pending order just slightly below the overall low of this candlestick that end up happening right here. Currently, right now, it's at 63.47. You go 63.47 and you end up looking at being able to get out at 62.85. That will be the overall area and space that we'll be trying to go after. Let's see if I can make a box around this. This will be, let's see. Yeah, I'll be looking at doing something like that. We don't have a stop loss yet. We don't have a fractal high. Until we end up getting a fractal high, there's really nothing to be able to do. Once we end up getting that fractal high, then we have a chance of being able to jump into it with confidence and knowing that this market has made its move, and then after that showed you that there was a U-turn that was prevalent. So once again, looking for something like this, push up to the upside, counter trend line break, and then after that be able to trade. early movement will end up being based off of whatever counter trend line break that ends up happening. Stop loss will be above that high. Then after that, it's the expectation that the market will continue to move down, break below this consolidation, retest it, and then fall down from there. That would be the second order that I would look at being able to take um, when it comes down to trading it. Okay, type in a Y, yes, if that makes sense. Currently, right now, there's no trade to be able to take, but we are breaking below this overall consolidation level as we speak. I'm looking for a retracement. I would like to be able to see this market. Uh, if the market does fall at 63.50, and then after that, start making a pop up first before jumping in. Gonna leave that up here. We'll talk about that. We'll talk about that on Wednesday when we end up having the next session. I'm gonna briefly go through. Briefly go through US 30. Um, and matter of fact, let me talk about US yen while I'm taking a look at this. US yen showing signs of a double top. Um, Essentially, we are pretty much at the highest price that we have been at before. Um, this M pattern would not surprise me that if it would end up happening. Um, the last time the market ended up pushing up here, it ended up getting all the way up to 150. Currently, right now, the market is at 149. There has not been a counter trend line break, but there has been strong movement. We can see that the oscillator is starting to show us that there are blue bars starting to show, saying that there could be a potential U-turn from a weekly perspective. We just haven't had that movement to be able to happen as of yet. I don't want to jump into it as of yet either without having some type of confirmation. Counter trend line break has not particularly happened, but it will also suggest that the market would be ready to go once that ends up making that movement to the downside. Um, we can see that the last time that the market ended up pushing up towards this area had a huge wick to the upside of 151, and then after that started to reject. I literally remember that day when that market ended up falling. Um, that was when the government started to be able to get back into it. Sometime around, if I remember correctly, sometime around November that ended up happening. Let me see if I see that. Let me see if that's right. What was October 20th of 20 of last year. So we're getting close to seeing possibly the same movement actually happen again from there. Um, now I can now be interested in being able to take advantage a little bit more. Remember, when the market ends up hitting resistance like this, you can look at two different ways of being able to get out. One, you could try to you can hold it all the way down to support, or what you could be able to do is that you could be able to get out at the halfway point. I kind of lean towards getting out at the halfway point. We never know when the market's going to end up having a slight U-turn, but 138 will probably end up being the area where if I end up getting in off of this sale, I would not. I would look at being able to hold on until 138. So that means set, forget, get out the way. Uh, hope hope that the your luck is with what's happening with the trading scenario, and then after that, kind of go from there. But until the market ends up making a U-turn, I'm not interested in being able to take a trade. But my trade interest will end up being towards the downside. So keep in mind, United States dollar index is showing signs of it has to get towards 150 before being able to U-turn. So U.S. yen will probably not make its move until the United States dollar ends up completing its move first. So I do expect that we probably may end up having a few more days of bullish movement before having indecision candlesticks that may end up happening, and then after that, the market ultimately falls. Um, don't know if y'all noticed this, but for the people that are paying attention, um, what does that look like to you? I'm going to change the color of this so everybody can be able to see it. I'm going to place it in black. Everybody, what is that? Let's see. Okay. That is a rising wedge. I'm glad I spotted this out. Now, a rising wedge is kind of like a roller coaster. You know how you end up getting on a roller coaster and you end up getting towards the point to where as soon as you end up getting towards the top, you start hearing the market. I mean, you start hearing the roller coaster start to click, 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 and then after that, you have that last click, and then after that, and then the market kind of falls. That's exactly what's kind of happening right here. Market it has been pushing up to resistance, support, support, resistance, support, resistance. May end up falling right here again. Support, resistance has that last little click, and then after that, have that fall to the downside. Typically, the fall when it happens is going to end up being very violent. So, um, just know that that could potentially end up happening. Let's see. I'm going to keep that in mind. US yen paying attention to it last year. The market ended up having the same drop right around this time last year as well. Uh, the market basically makes the same moves over and over and over again. So it wouldn't surprise me if we have a strong sale that could happen that we may end up having to be able to pay attention to a little bit more. I'll probably stop right there. What we end up doing is we'll do this again on Wednesday. Be able to take a look at how everybody ended up doing. I'm going to pay attention to uh, obviously the two pairs that I'm paying attention to is Australian dollar, United States dollar, and US yen. Because we haven't been doing this as regularly, we'll focus in on those two pairs going into Wednesday session, and then after that, see how well we end up doing. And obviously, if you end up taking a look at my homepage, you can be able to connect with us and be able to see what's going on with the trade as well. Like always, make sure that you end up planning your trade. Trade your plan. We'll see each and every one of y'all in the next video. Take it easy.